Hello and good morning, ladies and gentlemen. Here with Martin Panef, Chief Account Executive Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. Get ready for a bit longer video today. Quite a lot to discuss. Then again, starting with North American markets. Yesterday, the industrial Dow Jones went slightly up, slightly down 20 points. NASDAQ over 70 points down yesterday. The Dixie index is up to 94.60 from 94.20. Initial and continuous jobless claims came out 3,000 better than the expectations. Consumer credit change at 2.46 billion better than the expectations. Yesterday, Fed's Yellen's speech, she was quite hawkish. The U.S. economy is on a solid course with some hints of inflation, so the Federal Reserve is on track for further interest rate hikes. Federal Reserve Chair Ms. Yellen said yesterday in a defense of her decision to tighten policy late last year. In a rare spectacle, Ms. Yellen spoke on a New York panel alongside her three predecessors, Mr. Bernanke, Greenspan, and Mr. Volcker, who ran the world's most powerful central bank before. She said that 7 years after the brutal financial crisis, the U.S. labor market was now close to full strength, again arguing that inflation would not be held down much longer by the strong dollar and low oil prices. A quote from her, yes, there is accommodation in the monetary policy that we have, but we think the gradual path of rate increases will be appropriate. And she also added, we remain on a reasonable path, and I don't think December was a mistake. Today, the most important events in the agenda will come from Canada. Housing starts reports, participation rate, net change in employment and unemployment rate in Canada. We would also have a few speeches from Fed officials. Next week, retail reports from the US and from Canada. Bank of Canada monetary policy statement is due on Wednesday, along with a statement, rate decision, and press conference. Moving to the European markets, yesterday, interesting moves on the DAX 30 and CAC 40. The DAX was 300 points down, 100 down for the French. Yesterday, French trade balance came out bad. Exports are down, imports are going up. So basically, the current account is also with over 1.5 billion in negative territory. Another report yesterday was showing the Swiss foreign currency reserves, which are up with another 5 billion. The ECB meeting minutes yesterday, the minutes of March 10th ECB monetary policy meeting got released earlier, and it looks like most of the content were already discussed in the March ECB press conference. However, it is interesting to note that there are discussions, or there were discussions, for even deeper rate cuts. However, ECB officials ultimately argued against deeper cuts, particularly in the deposit rate, because it may unduly increase the pressure on banks' profitability and could also further exacerbate financial market volatility and have direct negative repercussions on the confidence of euro area households and small entities, small firms. Big movement yesterday on the euro main pairs. The euro dollar 110 range, 35 down. The pressure remains to the downside. We'll see the reports today. Euro yen almost 300 range, 180 down. 250 range for the Aussie, 180 for the New Zealand dollar. Today, unemployment from Switzerland, a slight rise from 3.4 to currently 3.5%. The Swiss CPI came out already as expected. Germany's exports, imports, trade balance, and current account reports came out all in green. Most probably the euro is moving up as we speak. UK markets, FTSE 100 lost 54 points yesterday. 10-year gilt yields closed at 1.45%. The pound dropped by 0.2% versus the dollar and extended its losses in this week. The move was provoked after the Dutch rejected the Ukrainian trade agreement, which gave more ammo to the pro-Brexit campaigners. The pound is approaching the 1.400 level, which was touched a little bit in the middle of the week. The cable, the pound dollar, 80 pips down yesterday, 110 pips range, going sideways today, versus the yen, 265 pips down yesterday, 400 pips range, versus the Aussie, 125 pips up yesterday, 315 pips range, versus the loonie, the Canadian dollar, 15 pips down yesterday out of almost 200 pips range. The pound versus the Kiwi, 30 pips down yesterday, 235 pips range. And versus the Swissy, 65 pips down, 110 pips range, going pretty much sideways today. We have a couple of reports in the agenda. GDP estimate is something that we're going to see. PMI construction, retail sales monitor reports, and housing price balance, which is going to be an interesting report. Industrial production and manufacturing production month on month, year on year. Those are all over the calendar today. We also have trade balance reports. Moving to the Asian Pacific markets, starting with the Japanese Nikkei 225, 245 pips down yesterday, 440 up today already. Trade balance on BOP basis for the month of February, 1.940 billion yen more than the previous. Current account is less than the previous reading. Consumer confidence eating 1.6 points more than the previous at 41.7. This is something that we were closely looking at. Big ranges on the yen yesterday versus the pound, 374 pips range versus the dollar, 220, 230 versus the loonie, 275 versus the euro versus the Swiss franc, 220, the Aussie 305, and the Kiwi 205. The Japanese currency has soared more than 10% against its US rival since the beginning of the year, pushing through levels not seen since October 2014. It logged its sharpest daily climb against the dollar in near 3 weeks yesterday, trading at 108.36 to the dollar in New York trading, compared to 109.75 late Wednesday. Japanese officials also gave traders one more reason to bet against the currency this week by signaling that they have no intention of intervening in the market by selling large quantities of yen to try and weaken the currency. This is a negotiation between the financial ministry over there. Both Prime Minister Shinzo Abe and Bank of Japan Governor Mr. Karuda spoke out against intervention this week. Tashibana Keishiro, a prominent member of Abe's Liberal Democratic Party, said on Wednesday that Japan's economy could tolerate yen strength only up to 100 to the dollar. The yen is 340 pips away of hitting the major resistance at 105 versus the US dollar, so pay attention to that. We have the Echo Watchers survey results coming out today. Also, China's 10-year sovereign bonds headed for their biggest weekly decline in more than 10 months. This has caused the signs of improving economy reduce the chances of further stimulus. Rising inflation is adding to the pressure, with data due next week projected to show that consumer prices accelerated for the fifth straight month. Our analysis predicted that the People Banks of China will extend a pause in its monetary easing for fear, fueling price gains, even as it risks ending a record rally in bonds. Next week, many events in the agenda from China. Starting from Monday, we have the inflation reports there. The CPI and PPI are due on Monday. Wednesday, we have the exports-imports trade balance reports, which are going to show us an indicator of the last event for the week, which is the China's GDP. Also on Friday, we have the retail sales year-on-year, industrial production as well. There is going to be a press conference from the officials over there. So it's going to be pretty important for the Pacific currencies and the Asian markets as well. We will keep you posted. For the Pacific front, yesterday the Aussie was getting hammered pretty much very hard of its Forex rivals, including its fellow condos, the Canadian dollar and the Kiwi, which were getting hammered themselves, making the Aussie the weakest currency during the London session. Aside from the risk-off vibes during the session, it's highly likely that sliding iron ore prices were weighing down on the Aussie dollar as well. You know very well that whatever they dig, pretty much whatever they dig from the ground is what keeps the economy growing, and the commodity price slide is affecting the currency severely. Commodities, S&P 500 index had a range of almost 40 points yesterday, currently at 2040. Crude futures fell sharply yesterday, erasing some of their massive gains from previous session as energy traders reacted to reports of a considerable inventory build at the Cushing oil hub and an unexpected increase among exports in Iraq. The crude oil prices rebounded in Asia this morning from sharp overnight sell-off on growing supply as investors look ahead at U.S. rig count data from Baker Hughes, which is due again today. Gold surged as much as $20 per ounce yesterday ahead of a public appearance by Ms. Yellen. After the close of the trading, gold gained in early Asia today on expectations that any rate hikes by the Fed will be gradual based on comments from the chairwoman. A reminder, the Baker Hughes oil rig count report is due today. That is pretty much all from me. Thank you very much for your attention. I wish you a successful trading day. Enjoy the weekend. Till the next week. Cheers. Bye-bye.